Good evening, students. Welcome to the LVC class of CA Final Paper 3 Advanced Auditing Assurance and Professional Ethics. And today, again, we are with you for chapter on reporting. In the previous session, we have covered SA 700, right, and CARO reporting with the help of practical, like real audit report. With the help of that, we understood that how each and every clause we cover in auditor's report. And today we are moving ahead, and in the next sessions we are having SA 701, CAM, SA 705, right, and SA 706. And in the next session we'll be covering 710 and 720, and of course questions, mixture of the questions of all the reporting standards, SS 700 series. So I hope you are preparing your own notes on regular basis, and whatever you have learned, please revise it at least 3 times, right? Each and every clause is very, very important of CARO. So you develop habit to learn the same with the CARO clause number also. Okay, and I think our faculty Venugopal ji, he did analysis of the questions also. He shared with you in the previous session that how many questions in our case scenario booklet or in our study material are referring to particular clause. Of course, in the examination, it is not that this clause is very important. In the examination, any of the clause can be asked. But then you need to develop habit that you are learning 5 clauses or maybe 6 clauses in a day. Next day you are revising the same and the remaining 6 clauses. So this way, if you are covering, maybe it will take 3 to 4 days, but your clauses will be like it's in your brain because of multiple revision. So when you are writing in the examination, you will not face this difficulty that you are not able to recall the clauses, right? So multiple revisions are very, very important. So not taking much of the time, Venugopal sir is there and we have to cover a lot. SA 701. So I think you must also be facing what is the difference between CAM or EOM, right? And modified opinion, we are having 3 types of. So how we will decide that yes, this opinion will be expressed? How auditor decides that yes, he will be giving disclaimer of opinion or he will be giving qualified opinion, or in which conditions he will give adverse opinion, right? So all these will be clarified. Apart from the same, with the help of real examples, he will also tell you that when we are drafting the qualified opinion or adverse opinion, what kind of terminologies are specifically used when we are expressing such kind of opinion. So not taking much of the time, over to you, Venugopalji. I hope
Thank you,
your
ma'am.
practical experience will make them enrich with the practical learning, and in the examination they will be able to draft the opinion if the question is being asked on the opinion part, and they will be able to, at the end of the session, they will be able to understand what is the difference between CAM or EOM or other matter paragraph. So with more clarity, with practical examples, they'll be through. And of course, you are taking MCQs also in between. So I hope that will enrich their knowledge and their conceptual clarity will be more. So with this, if you find any difficulty, you can write to me at the end. I'll again interact with you. So if you have any doubt relating to BOS or in the topic, you can definitely reach to me. So over to you, Venugopalji.
Thank you, ma'am. Thank you very much. So pretty much what is going to cover in today's session was already disclosed to you. So good evening, each and everyone. So this is what for entire chapter, what was already covered and what are we going to cover on in today's session. So we will be taking up audit versus certificate. We'll be covering notes to accounts versus auditors reports, qualifications. Then we will move on to taking up standards on auditing 700, 701, 705, 706, and etc. So we will quickly refresh what we have covered in the previous session. So how do we remember entire chapter? So we will remember the entire chapter in this simple presentation which says section 143. The entire chapter revolves around section 143. You call all the standards which are prescribed by ICAI, notified by central government, from 143.10, the CARO 21 clauses which you have covered in detail in the last session and before sessions, from 143.10, reporting of fraud 143.12, duty to inquiry and duty to report will be there in 143.3. So the entire chapter is pretty much inside section 143. So the other slides which we have gone through, I'll quickly go through so that you can refresh, you can recollect, you can retrieve what was discussed in the previous session. So these are the standards which we are going to cover. We had a detailed discussion on CARO. Just for an example, clause number 14. What does clause number 14 says? Anyone? So clause number 14 talks about internal audit system, right? Internal audit system. Clause number 13, what does it talks about? Clause number 13. Anyone?
Related party transactions.
So compliance. Yes, compliance with section 177 and 188. What does clause number 7 talks about? Statutory
dues.
Statutory dues, both disputed and undisputed, or undisputed and disputed. So this way you can also recollect. Okay, you can play with 21 clauses. You can remember whenever you see some number. Okay, you should be able to recollect what is the CARO specific clause talks about. So not only studying, but revision is also important, as ma'am was also mentioning. So how to, what are the types of questions that ICAI is asking from simple to complex? We have looked at it, how to approach a question, how to read the question, what is the starting point, from where we need to move, that also we have discussed. This is the case-based summary which we have discussed in detail. 143 we have covered. So today what we are going to cover, let us start with today's topic, audit versus certificate. So we know audit is all about the independent examination. We have standards on auditing. So we know pretty much sampling, materiality. So till today we have learned so much about auditing, right? So what do we know? Anyone knows what is certificate? In which scenarios we issue certificate? What is the procedures we follow before issuing certificate? Anyone? So let us take an example, turnover certificate. So if a company has given its franchisee to some small dealer in a town. Now this dealer, he will sell the goods and on which he need to pay royalty to the company. Okay. So the owner, the brand owner, he wants to know how much sales they have made, right? So this franchisee dealer, he may manipulate the turnover numbers. So this brand owner wants this to get certified, this to get verified. The facts has to get verified by some independent party. Now he wants certificate, turnover certificate, for example, net worth certificate. There are multiple certificates which RBI asks for NBFCs. So hope you understand the example of turnover certificate. Even banks ask certain certificates. So in case of certificate, we may not follow the auditing standards. We may not give our opinion. So the assurance which we are giving is almost nearer to absolute assurance, not like reasonable assurance. In auditing, we'll use sampling. In certificate, we may not use sampling. We will check the factual accuracy of the amounts which we are going to certify. So that is, these are the differences between audit and certificate. Let us have a look. So it is written confirmation of accuracy of facts. A report is formal statement expressing an opinion. So here it is fact based, here it is opinion based. Here it is accuracy and correctness. Here it is expression of opinion. So on and so forth. So here you are giving factual assurance, which is very nearer to absolute assurance. So your your assurance is going close to 100%. But here audit report, because we are using sampling, because there are limitations to our audit, we are only giving reasonable assurance. It is high level of assurance. So this is how we need to differentiate between certificate and audit report. Nevertheless, if an auditor, if a chartered accountant, practicing chartered accountant, who is issuing either audit report or certificate, he should give UDIN number. Unique Document Identification Number is mandated by ICAI that every audit report or certificate has to be affixed, not only with signature, not only with membership number, not only with date, place, signature. It also has to be mandatory. We need to fix UDIN number as well. A specific unique document identification number has to be affixed. So any doubts with regard to audit report and certificate till now? Yeah. Let us move to notes to accounts versus auditor's report. So what is the, if let us say management, if they want to mention something, they use notes to accounts. If they want to explain something, they use notes to accounts. So can auditor, can he rely just on notes to accounts? Let us say management is mentioning that they are valuing inventory at cost, not at cost or net realizable value. So should auditor has to give a qualified opinion, or should auditor mention something in the audit report, or he should keep quiet because management has already mentioned? So let us say management mentioned in their notes that inventory is valued at cost. So is it in compliance with AS2 or Ind AS 2?
No, sir.
No. So in this case, can auditor has to keep quiet, or he should mention something in the report?
Yeah, he should mention in the report, sir.
He should definitely mention there is non-compliance with AS2 or Ind AS 2. There is a non-compliance. So the notes to accounts is not a substitute for auditor's report. Notes to accounts is management's document. Auditor's report is the auditor's opinion document. So what was mentioned in the notes to accounts, whether it is true, whether it is false, if it is true, auditor will keep quiet. If it is false, if it is in non-compliance, the auditor has to raise a modified opinion. Secondly, let us say the same fact was mentioned. Same example, let us take same example. The inventory was measured at cost. Now auditor is telling modified opinion he is giving, but he is just giving reference to the notes. Will that be sufficient, or he should reiterate, he should explain in his own view? Should he just give reference, or should he give his own view?
Sir, he has to give a modified opinion, and the basis for modified opinion also he has to provide in the report.
Correct. He has to give opinion, he has to give basis for opinion, and most importantly, what is this opinion and basis for opinion? Is auditor's independent viewpoint. Management has done the mistake. Management is also mentioning that they have done the mistake in the notes. However, auditor cannot keep quiet, number one. Number two, auditor has to analyze it independently and explain that in his own language. Report in as per reporting standards. So just giving a reference cannot satisfy or cannot reduce the auditor's liability. He should take it and he should give it as an independent viewpoint. And can EOM, emphasis of matter, is an substitute for qualified opinion? How not? We'll see that in detail when we in the next slides. So let us just quickly look at notes to accounts versus auditor's report. So something which are disputed matters, which were mentioned in the notes to accounts, auditor has to independently assess that. Just giving reference does not itself constitute as a qualification. Auditor must state all qualifications independently from the auditor's own standpoint. So on and so forth. You have something like reporting legal or regulatory breaches. If it leads to material misstatement, we should express that except for the effects. So this also we will discuss in detail when we are discussing SA 705. So hope you understand the major distinction between notes to accounts, between auditor's report, who is the owner of notes to accounts, who is the owner of auditor's report, how each other is related. Pretty much clarity you got it. So section 145 of Companies Act, which gives power for an auditor, for a chartered accountant, practicing chartered accountant to sign the financial statements. So here, no other person, section 145 will talks about qualifications. So all those things, only chartered accountant in practice, maybe a proprietor firm or maybe a partnership firm having all the chartered accountants, or a partnership firm or an LLP having multiple multidisciplinary people like CS, CWA, MBA, engineer as an LLP. However, the signing has to be done by chartered accountant only. So that is importance of section 145. Section 143(9), the entire power of standards on auditing comes from section 143(9). Very simple line, very simple statement. Every auditor shall comply with the auditing standards. So every chartered accountant in practice has to comply with auditing standards. However, Companies Act also mandate chartered accountants to comply with auditing standards. So what are those auditing standards which are covered in chapter 7? So these are the auditing standards which are covered as per chapter 7. So let us quickly look into SS 700. Although in the first class we had a detailed discussion on elements of SS 700, I just want to touch upon SS 700 for 5 minutes, which is very important to understand when we go to SS 705, to understand modify opinion from this standard. It comes from this SS 700. So SS 700 is largely divided into these 5 aspects. What is the objective of SS 700? What is the purpose of SS 700? Elements of SS 700. Let us say if an auditor, he is complying with standards on auditing issued by ICAI, standards on auditing issued by other jurisdiction, international jurisdiction, which was also covered in the second session, which has happened on 8th October, and supplementary information was also covered. So pretty much these 3 aspects are already covered, except going concern and location of auditor's responsibility that we are going to cover today. So let us quickly discuss objective of SA 700, which is very, very important. So what is the objective of SA 700? Twofold. First, you should give an opinion on the financial statements based on the evaluation of conclusions drawn from the audit evidence obtained. So divide these 4. First, what an auditor has to do? Auditor has to obtain the audit evidence. Then he should verify the audit evidence. Once he verifies the audit evidence, he will conclude whether it is good, bad, correct, incorrect, compliant, non-compliant, sufficient, not sufficient, appropriate, not appropriate. He will draw a conclusion. After drawing conclusion, he should evaluate his conclusion, whether this conclusion what he has drawn, can it be leading to key audit matter? Can it be leading to emphasis of matter? Can it be leading to modified opinion? So that evaluation has to be done. Finally, that evaluation, he should give it as an opinion. So just by saying opinion is fine, or you should give it as a written format. The second objective clearly mentioned, you should give it a written report. So let me take an example. We will take inventory, same example. So inventory, you have obtained valuation workings, inventory valuation workings. So this is the audit evidence you have obtained. You have obtained physical verification of inventories to check the quantity, whether verified or not. So while verifying inventory verification, you understood management has done valuation based on cost, not based on cost or NRV, whichever is lower. So you concluded management has done wrong. Now you should do evaluation. How do you do evaluation? So whether this misstatement, whether this error, whether this mistake, whether this non-compliance, whether this is a misstatement, whether this is material misstatement or not, whether this material misstatement is it pervasive or not. So you need to check all those things in evaluation. Once you evaluate, you can give, if it is material and pervasive, you will give adverse opinion. If it is material but not pervasive, you will give qualified opinion. So this objective is very important. We will take few more examples so that you will understand this. Based on these 4 statements, the entire 700 series will run. So SS 700 objective, understanding of SS 700 objective is very, very important. Let us take debtors outstanding. In case of debtors outstanding, confirmations were not received and there is no alternative evidence also, hypothetically. Now the evidence itself is inefficient. The audit evidence itself is inefficient. And these debtors are forming part of major amount in total assets of the balance sheet. So it is material as well as pervasive. Then you give disclaimer of opinion. Depreciation, you check the computation, it is fine. So you give unmodified or clean report. Anyone got any doubt here? Your clarity got enhanced. If this is clear, the next stream of slides or concepts will be very easy for you to understand. Any doubt till here? Yes. So this is the objective of SS 700. The purpose of SS 700, it promotes consistency. So globally, at least national level, any report you can pick it. So it starts with title, it starts with addressee, it gives your opinion paragraph, basis for opinion, etc., responsibilities, place, date, signature. So pretty much it is standard, it is consistent across multiple reports. May it be big listed entity, may it be small private limited entity, may it be other companies, the reporting pattern is pretty much consistent. So it promotes consistency, number one, and it also gives flexibility. So tell me, give me one example where in audit report you see flexibility and why flexibility is needed. So the flexibility, assuming key audit matter. Every company may not have same key audit matter. Every company may not have same emphasis of matter. So flexibility has to be provided. It cannot be standardized. So when it comes to 705, 701, 706, you see 720, you see there is flexibility given because case to case, company to company, the scenario changes. So flexibility was given to that extent. When it comes to certain items, you need to go for standardization. You need to maintain consistency. Hope the purpose is also clear. The objective is also pretty much clear for you guys. Next, we are moving to SS 700. There is going concern. We'll see few scenarios. So going concern assumption. Management has prepared their financial statements on going concern basis. And auditor has verified that and auditor find it is appropriate. And he does not find any uncertainty. How auditor does not find any uncertainty? Company is performing well, number one. Year-on-year growth, company's growth is good. Company have next 3-4 years plan to how they enter into different markets, how they introduce new products, how they want to sell. Management is performing well. The cash flows are good. The ratios are good or positive. So all these things, seeing this, the going concern assumption is appropriate. The uncertainty, when you verify, there is no uncertainty for audit, it does not exist, and management no need to give anything in that with respect to going concern, management no need to disclose anything. So the conclusion is no reporting, in the sense you are giving a clean report without material uncertainty related to going concern section. So this is pretty much clean case. Now second case, the going concern assumption is appropriate, but you feel there is uncertainty, and management is also mentioning certain facts about that uncertainty in their financial statements. So now the reporting style will change. You should report something as material uncertainty relating to going concern with a clean report, with an unmodified opinion. You can report this. So what could be the scenario? Can anyone tell me what could be the scenario where going concern assumption is appropriate, but still there is uncertainty exists, and even management feels that there is an uncertainty exists? Can anyone? So let us take an example. US, they are increasing, they are putting tariffs. Our most of the sales, not most of the sales, let us say 30% of our sales is to US. Now, because of these tariffs, increase in tariffs, the product become costlier. The product become costlier, and the sales will get reduced. The profits will come down. So this way, there is little bit uncertainty that exists. Even management is also of the view. So in that case, you need to mention that material uncertainty related to going concern. Let us say going concern assumption is appropriate, uncertainty exists, but management is not disclosing anything in their financial statements. Then the conclusion is you should give a modified opinion, either qualified or adverse. So what is this case? Management is sure of there is no uncertainty. However, based on the audit evidence which auditor has obtained, in his conclusion, he found there is uncertainty, which he eventually get discussed with those charged with governance, management. The auditor will also discuss to suggest to include that in financial statements, but management is not in a position to disclose that fact in the financial statements. So auditor has to take a stand, and auditor has to modify his opinion. So till now, the first two scenarios we are giving clean report, but the third scenario we are giving modified opinion. So the fourth case is going concern scenario, going concern assumption being inappropriate. So here there is no uncertainty. Auditor is sure that now company is in a deep trouble. Company may not able to sustain. Company's going concern assumption is inappropriate. So in that scenario, even I am assuming a case where management still prepare the financial statements on going concern basis, then the auditor has to give an adverse report. So these four scenarios, anyone has doubt, anyone needs more explanation, let me know. Moving to next section, which talks about location of description of auditor's responsibilities. So we just discussed, like in the elements, auditor's responsibilities. We know where to place the auditor responsibilities. However, standard gives you certain flexibility. The auditor responsibilities, 99% remains same in every balance sheet. Every audit report. So in that case, can we shift this auditor responsibility to some other place? Is it allowed? If it is allowed, where we need to place? Can we remove entirely from the audit report? Yes, the flexibility is allowed. So you can pretty much keep auditor responsibility within the auditor's report, what we have seen in the element section when we are discussing. We can shift it as an annexure, like Caro, like IFC opinion. So we can shift it as an annexure. So instead of giving that in the main report, what you can do, you can just say refer annexure C, refer annexure D. So reader has to go and check annexure D if he is interested to know any change in auditor responsibilities. The third option is you are taking out from the entirely from the report and you are moving it as a web link. So it is not available in the auditor's, it is not available in the audit report. The auditor responsibilities was kept in somewhere, okay, some web link, some website. However, the link, the URL was given in the audit report. If someone wants to check, he can go to that URL and check the auditor's responsibility. So such flexibility was also given. So this is talking about location of description of auditor's responsibility for the audit of financial statements. Practical scenarios. In practical, okay, no one complies with B and C. Everyone goes with option A itself. There are few companies in US or there are few companies outside India who can choose option B and option C, that is global level. But in India, everyone complies with option A itself, because standards on auditing also in line with international standards on auditing. So same thing, we also make sure that our standards on auditing is in line with global auditing standards. So these options have been given. However, in practical, no one is using option B and option C. So MCQs and theory questions, let us see that. Before that, we need to see the approach, how we need to answer. Similar to what we have seen. Yeah, Samyanathan.
Yes, sir. I need one clarity. Now
Yes.
that the location of the auditor responsible report, we can give in the main report or give in the annexure on the web link. But generally in our practical world, we are using the first option only in the main report. How we do to address in the examination, sir?
Definitely, we also go ahead with option A only. Okay. So if you are given to draft, so you also choose option A. But if the options does standard gives flexibility? The answer is yes. So you need to come up with a question whether they are asking, is it mandatory or is it flexible? It is flexible. If they are they're telling you to draft, then you go ahead with option A only.
Okay, which means it's optional of the auditor.
Yeah. Yes, option of the auditor. The flexibility was given.
Okay, sir.
Yes. Yep. So similar to what we have seen when we are discussing Caro, how to approach a question. Here also, how to approach a question when it comes on standards on auditing. The questions can be from, again, simple to complex. It can be from individual standard, only talking about SA 700 or SA 701 or SA 705, or it can be multiple standards covering SA 220 or SA 700, SA 700 plus SA 705, etc. Third complexity could be multiple standard from chapter 1 to chapter 11, because the weightage is common. You see 45 to 55%, the weightage is common. So anything from chapter 1 to chapter 11 is also can be clubbed and can be asked. The most complex question can be, they can also take something from chapter 12 to chapter 18, like audit of NBFCs, how an auditor does digital auditing or digital threats, how auditor will analyze like spoofing, like phishing, etc. They can relate that with these standards and they can ask questions. So let us quickly take one question. Please read the question. And once you are ready, let me know. If you're ready with the answer, let me know. Anyone ready with the answer? Which element of SA 700 we are talking about? Which element of SA 700 we are discussing in this question? Is it title? Is it auditor responsibility? Is it signature? Is it date? Is it place? Which element of SA 700 we are discussing in this question? So I'll read the question. Pine and Associates is a statutory audit of BV Limited, a listed company. Started its operation 6 years ago. The fieldwork during the audit of financial statements of the company for the year ended 31st March 24 was completed on 1st May. The report was dated on 15th May. During the documentation review of the engagement, it was observed that the engagement quality control review was completed on 18th May. The engagement partner had completed his reviews in entirely by 12th May. So if you draw a line and if you put the dates, 31st March 24 is the balance sheet. Audit was completed on 1st May. Engagement partner review got completed on 12th May. Signing has happened on 15th May. Engagement quality control review was completed on 18th May. These are the sequence of events, right? If you draw a line and if you put the dates, these are the sequence of events. Is anything has gone wrong in this? Or everything is fine?
Yes,
Everything
sir.
is fine?
Gone wrong, sir, actually. See,
So
actually,
where the wrong has gone?
the audit report, the signing, the report was dated on 15th May. See, that engagement partner reviewed later that. See, audit dated that a quality control reviewer should review. Then only it has to be a report to be signed.
Correct,
That is
correct.
the problem
Good.
over here.
So
As per SPC1.
which element of SA 700 we are discussing here?
No, sir. Here is the SQC1 is talk about this.
SQC1 plus see, SQC1 is about quality control of the firm as a whole, right?
Yes, sir. Yes, sir.
There is smaller part of SQC1 which is lying in standards on auditing. Do you know that standards? Which is very much similar to SQC1.
Yes, 220.
SA 220, right? So SA 220 is the quality control for engagement level. Okay. So SA 700, what is SA 700 playing here? SA 700, the date, right? SA 700 mentions us to, mandates us to mention date, right?
Yes, sir. SA 700 also is the mandate on the date, the date of the audit report.
Correct. So this is, so if you go back, so this is not individual standard. This is not SA 700. This is not from 700 plus some other standards in chapter 7, but this is C, the question number C, which is SA 220 plus SA 700. Okay, A, B, C, right? So there is D also, we will cover it once we move on further. So this is C. C means SA 700 plus SA 220. So even SA 700, it is telling about date. We are not giving adequate importance while reading SA 700 when we discuss about date. So even with the smallest element, they can ask question like this. So the auditor report date cannot be earlier than the review of engagement partner or engagement quality control review partner. So this is the answer.
Yes, sir. Here is the reviews and that the engagement partner review done prior to the reporting. That is no issue. But only the thing is that the here issues engagement reviewer.
Hello.
Yes, sir. Sir, I am talking about the engagement partner reviewed correctly. After the engagement partner review, it
Yes, yes.
goes to the engagement quality control reviewer. Only that part is missing.
Correct. That part is the problem. That part is the concern, and that part is the issue which SA 220 as well as SA 700 deals with. So next, moving on to SA 701. So till now, we are good at what we have covered. Going concern, objective of SA 700. Don't forget objective of SA 700. Can anyone repeat what is objective of SA 700?
Sir, to provide opinion on based on the evaluation of the based on the audit evidence, and
You
to
missed
give
one thing.
a report in written.
Based on the of conclusion of audit evidence.
Yeah, so you have 4 steps or you have 4 paths. So first you obtain audit evidence, you verify and you come to a conclusion, you evaluate the conclusion, finally you give an opinion. So I want you to remember the 4 points and I want 05, I need that objective has to be in your mind so that you will understand it better. So let us discuss about SA 701, which is communicating key audit matters in the independent auditor's report. So what are we going to discuss? Similar to SA 700, we are going to discuss here the objective of SA 701 and purpose, applicability of SA 701, definitions. So what is key audit matter? What it comprises of key audit matters we will discuss, and scope of key audit matter also will be discussed. So for whom it is applicable? So it is applicable to all the listed entities, which is mandatory. It is the circumstances when the auditor otherwise decides to communicate key audit matters in the auditor's report. So this is voluntarily. If an auditor, he wants to give CAM. So can he give voluntarily? The answer is yes. But while he gives CAM, while he gives key audit matters, he should comply with SA 701. So whether he is mandatory reporting, whether he is voluntary reporting, he should comply with SA 701. And let us say tomorrow, central government, MCA, someone notifies that CAM will be applicable to unlisted public companies. They may come up with a notification. They may say private companies with more than 500 crores turnover, private companies with 200 crores turnover. So they may come up. So that provision was also mentioned that tomorrow if someone says it is required by law or regulation, they also has to apply CAM. So tell me, is it a separate opinion or it goes with one of the opinions? So it goes with one of the opinions. So we have clean report, unqualified opinion, we have qualified opinion, we have adverse opinion, we have disclaimer of opinion. So the opinion is of 4 types. SA 701 key audit matters, whether it goes with any of this opinion or again there are exclusions. Let us have a look. So if it is a clean report, you can have CAM. If it is qualified report, you can also have CAM. If it is adverse report, technically you can have CAM, but practically you need to think twice to give CAM, because you are telling in adverse report, you are telling it is not true and fair. So how relevant, how correct to give a CAM in adverse report, but technically it is, you can give CAM. However, practically it is not that relevant. But disclaimer of opinion, you have not received any information. You have not received the sufficient and appropriate audit evidence, and the possible effects of that is material and pervasive. So CAM is not allowed. This is as per standard. CAM is not allowed. It is logical as well as it is technical. It is, however, adverse report, technically it is allowed, but practically you don't think of giving CAM in an adverse report. Applicability is clear, everyone? Any doubts with respect to applicability? SA 701 key audit matters is not a separate opinion. It goes with one of the opinions. However, it cannot go with disclaimer of opinion. It can go with clean report, it can go with qualified report, it can go with adverse report, but it cannot go with disclaimer of opinion. Moving to objective or purpose. So the key audit matter, it enhances the communicative value of auditor's report by providing greater transparency about the audit that was performed. So here we need to clearly discuss, it enhances the communicative value of auditor's report. So you have audit report already prepared. So now you want to enhance the value. Now you want to enhance the value of the auditor's report. So only for that purpose, and plus you want to give greater transparency about how audit is performed. So when we discuss SA 705, when we discuss SA 706, part of 706, which is emphasis of matter, we discuss about financial statements, whether it is reported correctly, whether there is any misstatement, whether this is whether we need to mention to the user of or reader of report that this item, please read it, this item is very important. Here in key audit matter, we are going one step ahead. We are going one step ahead and we are telling this is the financial statement line item which was presented correctly, which was disclosed correctly, but how auditor has got to know that this has presented correctly or disclosed correctly? He has faced challenges. He has faced multiple challenges. He wants to make, he has not taken a straight route. The audit evidence was not obtained just like that. He carried out alternative procedures. He faced so many challenges to address that matter. So lot of struggles, lot of assumptions, lot of challenges he faced in order to get comfort about that financial statement line item. So here we are going one step ahead beyond financial statement line item. What auditor has faced challenges? How auditor able to satisfy himself that the financial statement is free from misstatements? So we are talking more about auditor. We are talking about how auditor has got comfort. Unlike in other standards, we will not discuss more about what auditor faced, what auditor has took alternative procedures. That we will not discuss in modified opinion. We will not discuss about emphasis of matter paragraph. Only in this key audit matter, the name itself clearly mentions key audit matter. So in addition to financial statement line item, what are the challenges we are facing? Auditor faced. What are all the procedures auditor has followed? What are all the alternative methodologies he has followed in order to ensure that financial statement line item is free from material misstatements? So hope you got some clarity here. So that is key audit matter. So the objective itself is very much clear and it clear all the clouds, how it is different from emphasis of matter paragraph, how it is different from qualified, adverse or disclaimer. These four, qualified, disclaimer, adverse, emphasis, all these four talks about or restrict yourself to a financial statement line item. They does not talk about how auditor responded to that item. Anyone got any doubt here? We are fine up to here. So now you tell me, give me few examples where auditor faces complexities, where auditor faces challenges, where auditors does not take straight path but he'll take alternative procedures. What is those line items? What are those line items? What are those areas? Anyone from anyone who is doing articles in assurance department while doing statutory audit, probably you may face certain complexities. So can you want to do you want to share some experience? So let us take an example. So I explained you technically, but now I'm explaining with an example. Provision for impairment. Provision for impairment. Can anyone tell me what is impairment? How do you compute impairment? So,
impairment will say carrying value as like a recoverable value. If it less than the recoverable value, then impairment.
yes. So if my carrying value is more than recoverable value, then we need to recognize impairment loss, right? If my carrying value is more than recoverable value, we need to show or we need to make provision for impairment loss. So how do you compute recoverable value?
So recoverable value will be that value in use or fair value less cost to sell, whichever is higher.
Yeah. So recovery value is higher of both, right? So how would you calculate net selling price? How would you calculate value in use?
Sir, value in use, we will do the present value of the future payments in cash flows.
Yeah. Good, good. Let us talk about there are 100 machineries. There are tens of plants. Let us talk about Reliance Industries. Let us talk about Tata Motors. So they have tens of industries, tens of factories, hundreds of machineries. So how do we calculate for each machinery? You need to calculate the present value of cash flows, and you need to come up with what is the value in use, and you need to come up with for let us say I sell this machine. What is my net selling price? So there is big task involved. Although it is, you can say there is a cash generating unit, independent cash flows, but still there is lot of complexities involved in computing impairment for big companies. So auditor has to collect so much of evidence, auditor has to make different judgments. So what is the interest rate you need to take in value in use? How, which discount rate you will take to calculate the cash flows to bring it to present value? Why that interest rate has to be taken? Many complexities involved in case of provision for impairment. So auditor has to go through so many procedures. He need to conduct so many procedures. He need to verify so many evidences to come up to a conclusion the provision which was made is adequate. There is no misstatement. There is no overstatement or understatement. Next, let us talk about pending litigations. Pending litigations. What is complexity in pending litigations? What auditor has to face in pending litigations? Can anyone tell? So pending litigations is again, even the lawyer who is handling that case, he may not be 100% sure that he will win the case or he will lose the case, right? So if he loses the case, what could be the liability? Let us say there are tens of cases, 20, hundreds of cases filing on different departments or different laws. You don't know. You need to analyze. You need to take evidences. You need to take confirmations from lawyers. You need to take what kind of evidence or what kind of stand company is taking. So much of complexity involved in pending cases as well. So auditor has to go through so many documentation, so many of procedures he has to do. So he will explain to reader. He will explain to reader. See, this is the area I faced challenge. At the end, I am comfortable. At the end, I am telling there is no misstatement. So at the end of key audit matter, you write these matters. Our opinion is not modified for respect to these matters. We'll see that. We'll see it in a moment. So you will say there is no modification. But to reach to that conclusion, I have gone through so much. I did this, I did that. So this is more about auditor, how he has performed to arrive at a conclusion that this financial statement does not have any misstatement. Clear? Understood? So should we go ahead? Ayush, am I audible? Is it clear?
Yes, sir. Very much
Yes,
clear,
sir.
sir. You are very much audible.
Yes, sir.
So you understood the
Yes,
distinction,
sir.
right?
The objective of CAM is completely understood, that why
Correct,
it
correct.
is there in the report.
Because this is once this is clear, now the other parts become so easy to understand. The other parts is very easy to understand because this is the confusing standard. You feel like why this can't be CAM? Okay. Now second part is, yeah, to assist the user in understanding those matters that in the auditor's professional judgment were of most significance in the audit of financial statements of the current period. Now I want to emphasize auditor's professional judgment. So does it says management judgment? No. Does it says management's expert's judgment? No. It is purely auditor's professional judgment. So if management is feeling that it is important item, we are not talking in key audit matter. If management's expert is feeling it's a significant item, we are not discussing key audit matter. Whose judgment here? Auditor's professional judgment. So you have to note down auditor's professional judgment. In his view, it is significant. In his view, he faced challenges. In his view, okay, that has happened. Okay. And the conclusion is positive. The conclusion is there are no misstatements. The conclusion is the specific line item is free from material misstatements. Now you answer me. After doing all these things, auditor got to know the line item has certain misstatements. Would you report it as scam or would you report it as qualification?
We have to report it as a qualification, not in CAM. CAM only for the communicative values to the user understanding.
Good, good. Now, do you think there is very thin line between CAM and qualification, CAM and adverse report?
No, sir, not like that. See, qualification is totally different.
True, true. See, I'm telling you, from CAM, whatever qualification you are giving, there may be few matters which are complex in nature. And for verifying that whether the item is free from material misstatements or not, okay, free from material misstatements or not, you do all the alternative procedures also, right? And suddenly you end up there is a misstatement. Let us say there is no misstatement, it may comes in CAM. If there is a misstatement, it will goes in qualification. There are matters where there is a very thin line where once you cross that and you got to know there is a misstatement, by doing all such analysis, all alternative procedures you did, and finally you got the conclusion, or the conclusion is negative, it becomes qualification. The conclusion is negative, it is material, it becomes qualification. The conclusion becomes negative, if it is material and pervasive, it becomes adverse. The conclusion is positive, the conclusion says the financial statement is free from material misstatements, then you give key audit matters. Did I confuse you? Did I give more clarity?
No, you've given the more clarity, sir.
Thank you.
Actually, sir,
Thank you for
one
that.
thing, like we have seen in the adverse opinion, there is also technically CAM possible. So, can you give an example of that thing? Like how, if there is material misstatement,
Yeah.
and how can a person give CAM in that?
Yeah. So first of all, we should I hope you also know what is adverse. So that's the reason you asked this question. Adverse opinion you only give when a single matter which is so significant, which there's a huge misstatement, and the misstatement is material, and also it is pervasive, or there are multiple line items, inventory, trade receivables, revenue, profit, everything is getting impacted. Just for an example, when you send balance confirmations for banks are not giving. Trade payables are not giving. Subsequent receipts mapping you want to do, management is not supporting, they are not giving bank statements. Inventory, physical verification was not conducted. When you check some documents, that workings is incorrect. Multiple errors. But somehow borrowings borrowings is fine. Somehow fixed assets is fine. But largely many items there is misstatement, so you give adverse report. But fixed assets impairment, they are doing fine. So now fixed assets impairment, what you will do, you will give CAM, because you verified everything, it is perfectly fine. So you give CAM for fixed assets, that this impairment which was provided, it is fine. The fixed assets and the impairment loss is free from material misstatement. However, all other items, you name it, all other line items, there is material misstatements. So it is material misstatements as well as it is pervasive, because it is affecting all the line items. So you give adverse, you give CAM. Hope it is clear.
Okay, sir. So we can basically say that CAM is somewhat the auditor is trying to show how he obtained the evidence, how he successfully obtained the evidence that that line item is free from material evidence.
True.
And
Correct.
okay, got it, sir. And
Yeah.
one more thing, like I'm just thinking about it, like if there is adverse opinion, then that basis, if I want my users, I want to give basis of opinion, then I will put that paragraph in the basis of opinion paragraph, and below that paragraph I will give more clarity to my user that why I arrived to that conclusion.
Yeah, correct.
If I
See, please, sorry. Yeah.
no, please
Yes,
continue,
sorry.
sir.
No, you are telling something.
No, this the difference between the basis of opinion and the CAM would be that in the basis of opinion, I would tell my users that yes, there is misstatement and this is how I arrived at the misstatement. And in
Correct.
CAM, I will tell my users that there is no misstatement and this is how I arrived at no misstatement.
Correct. So now, technically I answered your question, but practically you see, when you give adverse report, the reader already lost all the hope on the company, right?
Right, sir.
Okay. Now you are telling me that there is one more line item which is good enough, and successfully I did it. So does the banker, does the investor, does the any stakeholder, does the government, all the stakeholders are interested to read CAM?
Not at all, sir.
So practically, as an auditor, while you are doing, you feel like once you give adverse report, which is material and pervasive, it is not needed for a reader to understand CAM.
Yes, sir.
Yeah.
Got it. Thank you,
Perfect.
sir.
Yeah. Thank you.
The thing is that when there is a adverse opinion,
Yeah.
so given the basis of opinion also. See, the thing is that see, as you clearly said, that there is 10 line items. Say example in the I will specifically say in the inventory alone there is a material and pervasive, so which warrant the adverse opinion. We given the adverse opinion and basis of adverse opinion also. And in CAM section, see, there is no contract with respect to inventory. The thing is that it will be other items, say example, investment or fixed asset or some other line item, which warrant to give the auditor based on his professional judgment, and he feels that it is a most significant to reader to understand in the community value. Only those things he will put it in the CAM paragraph. That CAM paragraph will not modify his opinion.
100%. 100%. You are right. You are right.
there should not be any contradiction with respect to others' opinion, whatever given there in the earlier paragraph. I mean that the opinion paragraph on basis of opinion, there should not be any contradiction when he putting in the camp paragraph.
True. So you are telling me that whatever item you are describing adverse cannot come in camp. 100%, absolutely right. Fine. So let us move to, so now you understood the objective purpose with which you also understood CAM in totality. But there are certain frills which we need to discuss, okay, which is necessary. Okay, definition. No, what are included in CAM? First of all, the most important point is you should have discussed this matter with those charged with governance. Definitely you if you recall what I just said, auditor is not taking a straight path. Auditor did not got the evidence just like that. I sent the confirmation, I got the confirmation. No, it's not like that. He didn't got the confirmation, so he did some subsequent, he called for bank statements, he did subsequent mapping, so he did some different route. So while you are taking the different route, you would have already informed the matter to those charged with governance that I am facing difficulty in this area. So the matters has to be discussed with those charged with governance. So any key audit matter before you report, all those matters should be coming from matters which were communicated with those charged with governance. So what are those matters which you communicate with those charged with governance? The effect on audit of significant events or transactions that occurred during the period. So what are those significant events or transactions that occurred during the period? Tariff, what I just told, tariff is a significant event globally affecting many companies. That is a significant event if you have good amount of exports. Let us say you don't have exports, you have all domestic sales, then it is not a significant event. Company to company, organization to organization, what is significant event for one company may not be significant for another company. So you should not only see what is significant event, you should also see effect on the audit, whether that significant event causing some effect. Next, areas of higher assessed risk of material misstatement. So you found pending litigation is high risk area. You don't know when the case get completed and a huge penalty will be levied on company. For that provision is already not made because it's still lying in contingent liability. It's a high risk area. So you need to, auditor has to do extensive audit procedures. He should verify more, he should collect more quantitatively, qualitatively, he should collect more evidence in order to address that high risk area. So areas of higher assessed risk of material misstatement or significant risk identified in SA 315. Fraud risk also comes into this. Next, significant auditor's judgment. Significant auditor's judgments relating to areas in the financial statements that involve significant management judgment, including accounting estimates that have indicated as having high estimation uncertainty. Ind AS 115. So there are, Ind AS 115 is also a complex standard, is a difficult standard. Okay, when it comes to big companies where they have multiple contracts with customers all across the globe, Ind AS 115 plays a very important role. Warranties, etc., discounts. Okay, estimates like example, Ind AS 113. How many of you remember Ind AS 113? What it talks about?
Fair value.
Fair value. How many levels assets have been classified? Level 1, level 2, level 3. Level 1 is for quoted instruments, level 2 is for observable inputs, level 3 is for non-observable. So if you have huge amount of investments lying in your balance sheet, which are level 3, now you need to follow 3 methods. Net asset method, there are 3 other methods which are given in Ind AS 113. So the fair value measurement took a very huge impact. There are so many estimates you need to take. Management has taken some judgment. So such things also will be covered as part of CAMP. So there are three things. First thing is significant events or transactions. Example, I'll give you one more example. Company shifted their books of accounts from Tally to SAP or Tally to Oracle. Hope you know SAP Oracle, right? One accounting software to another accounting software, right? So is it a significant event?
Yes, sir.
Why so?
See, significantly is based on the auditor will judge it about it whether it is based on his professional judgment, based on the knowledge and expertise, he
You
will
are the auditor.
decide.
You are the auditor. You are the auditor. You told me significant event. You are the auditor. You tell me. So now you should read the word. I have not highlighted it, so I'll highlight it now. The effect on the audit of significant events or transactions. There could be hundreds of events happening in the world, hundreds of events happening in the company also. But will it affect on the audit? So Tally to SAP, once books are shifting, the opening balance has to be carried forward accurately. If there is mistake, the numbers will go here and there. All the balances has to be carried forward properly. Customer balances, fixed assets, net book values, suppliers balances, inventory balances. The working capital has to move to working capital, not to RMR, not to FG, not to raw material, not to finished goods, right? So when accounting system, accounting software is changing from Tally to Tally to SAP or Tally to Oracle, all the numbers are shifting from here to there. So it will eventually give effect on audit of significant events. Let us talk about one more example. Company is shifting their attendance system from manual to biometric. Will it have an impact on audit?
Yes, sir, definitely. The payroll wages will go for toss.
So, so how far this input is going into the system, how far this will be affecting my numbers, my employee benefit expenses, how far it is impacting, one has to measure the effect on the audit of financial, audit of significant events. So whether that event or transaction is affecting or not. Okay, let us say I'm implementing uh, some kind of automation I'm bringing for purchase requisitions, automating purchase requisitions. So whenever it touches safety stock level, the purchase requisition has to be raised. So I made this automated. So this ERP system is not having any effect. So although there is event occurred, but there is no effect on audit. So you should not only, in the question you should read not only the significant event, but the effect on audit also has to be carefully, you need to analyze. Okay. So next, higher assessed risk and significant audit judgments. So these are the 3 points you should think in your mind, keep it in your mind, so that to analyze whether it is key audit matter or not. And more importantly, these matters would have been communicated with those charged with governance. That is also another very important. If it is significant, if it is high assessed risk, generally, in general, you would have communicated with those charged with governance, right? So we are done with applicability, we are done with objective, we are done with definition. Now we'll understand scope. Should we see one report how CAM is reported? I'll show you one report how CAM is reported so that you will get more clarity. So we will take so you can see my screen.
Yes, sir.
Is it changed to key audit matter?
It's not visible.
Okay. Now Now is
Okay,
it?
sir. Yes, sir. To the extent it is readable now.
Yeah. So the company has certain significant ongoing legal proceeding for various complex matters with the government of India and other parties continuing from earlier years, which are as under. So there are different cases going on, pending litigations, which are complex, which is government of India and other. So they have given details of those cases. Okay. Now, how auditor has addressed this? Auditor response. This is important because it is key audit matter. Now, what is auditor telling? Our audit procedures included and were not limited to the following. What he is telling? He is telling the information which I have given below, is it complete or is it incomplete? It's incomplete. What he is telling is, I have done so many things, but I have included few. Okay, our audit procedures included and were not limited to the following. Is it clear? So he has done much more than what he has already mentioned here. Okay. So top 5 items or top 6 items, what he has done is mentioning here. Tested the design, implementation and operating effectiveness of the controls established by the company in the process of evaluation of litigation matters. So what is the design company has done? What is the implementation? How far it is operating effectiveness? That has been developed. Assess the management's position through discussions with the in-house legal expert and external legal opinions obtained by the company where considered necessary on both the probability of success in the aforesaid cases and the magnitude of any potential loss. So he has discussed with in-house legal team, and wherever necessary, he has gone to external legal opinions also. So he took, using the work of management's expert, he called for opinions also. Okay. Discuss with the management on the developments in respect of these litigations during the year so and so till the date of approval of standalone financial statements. So he saw developments because the moment you started the audit, probably the moment you ended the audit, you may take 15 days, you may take 1 month, you may take 2 months. So in these 2 months, whether any development has happened, whether any case has been closed, whether any liability has been imposed on the company. So all those developments were also being tracked. Rolled out enquiry letters to the company's legal counsel and assessed the responses received. So you send some letters directly. Alter has sent some letters to company's legal counsel and assess the responses received also. It didn't stop there. Assess the objectivity and competence of the company's legal counsel involved in the process. Who are the lawyers involved? What is their experience? How far they are good enough? How far they are objective? Okay, that also has been assessed. Reviewed the disclosures made by the company in the standalone financial statements. So what kind of disclosures they have given in pending litigations? What is the volume involved? All those things also been reviewed. Obtain management representation letter on the assessment of these matters. So this much of auditor, these many steps auditor has done to address this matter. And finally, he concluded that there is no misstatement, that this line item is free from material misstatement. Clear? Should we take one more line item? Hope it is clear, right? I'm audible?
Yes, sir. Clear, sir.
Yeah.
Yes, sir.
So you can also read 4-5 key audit matters so that your clarity will stay intact. Okay. So please do read 3-4 examples of CAM. Okay, as homework. So let us go back to presentation. Yes. So next, scope. Okay. So practically also we have seen how CAM is reported. Okay. Scope. To understand the scope, I made this for easy understanding. What comes to your brain when I say those charged with governance?
Yes, sir.
Which standard comes? Which standard out of many standards? Which standard comes first to your brain when you say those charged with governance?
260.
Say 260,
Good.
65.
Next. So I'm reading your brain, huh?
Good.
Okay, what's the next standard? Come sequentially. What is the next standard comes to your brain when you think about those charged with governance, other than what was already highlighted?
SA 580,
Uh,
written represent.
okay. Can we come ascending order, small to big? Can we come from? So, okay, you keep on guessing. Okay, I'll tell you. SA 240, rating to fraud risks, right?
Yes, fraud.
SA 570, going concern. If there is something which comes to your notice that affects going concern, you definitely discuss with those charged with governance. SA
Yes, sir.
701, which is what we are discussing, key audit matters. SA 705, if you want to qualify something, if you want to give adverse opinion, if you find certain misstatements, talk to those charged with governance, that is SA 705. And SA 706, if you want to give something emphasis of matter, those matters also will be discussed with those charged with governance. So these are all the standards which talks about those charged with governance. So here, this diagram or this image will give you two things. One is to understand the scope of SA 701, scope of SA 701. Second, when a question is asked, scenario based question or any question, if the question consists of the word those charged with governance, so these are the standards which should come to your brain, and you should filter out. How should filter out? That also should be come to your brain. Now, sticking to SA 701, answer to my questions. Can SA 701 is a substitute for SA 705?
No, sir.
Can SA 701 is a substitute to SA 706?
No, sir.
Can SA 701 become a substitute for SA 570?
No, sir.
Yeah. So you already understood the scope. Communicating key audit matters in the auditor's report is not a substitute for the auditor expressing a modified opinion in case of circumstances of a specific audit engagement as per SA 705. So you understood the concept clearly well, because you already understood the scope of key audit matters. Second, it is not a substitute for reporting in accordance with SA 570. It is not a substitute. Okay. And it is not a separate opinion. We saw while we are discussing applicability. Key audit matter is a separate opinion? No, it's not a separate opinion. We are giving opinion. Okay. As per 700, as per 705. Key audit matter is not a separate opinion. It is not a substitute for disclosures in the financial statement. Can it be a substitute for disclosure in financial statements?
No, sir.
No, it is not. So this is the scope. The scope of SA 701 is just this. It is exclusive definition. So you are telling SA 701 is not a substitute, is not a separate opinion, is not a substitute. Hope scope is also clear for everyone. Next. Although we have not covered SA 705, we got more clarity from here itself. What is SA 701? What is SA 705? To some extent, what is SA 706? So this will give you even more clarity. You can also take a screenshot and you can refer this again and again, so that the clarity which you got in this session has to be there till you attempt the exam. Okay. So while coming to report, SA 570, should we communicate matter with those charged with governance? Definitely yes. Definitely yes. Okay. We will communicate. We'll communicate that matter with those charged with governance. Whether the matter is available in financial statements? Yes. Whether there is a misstatement? No, there is no misstatement. Example. And the matter is relating to company. So we will give that as material uncertainty relating to going concern. We'll give that as material unrelated to going concern. We have already studied in going concern scenarios. Next, if it is relating to SS 570, we communicate with those charged with governance. Let us say financial statements. Management has not mentioned the fact. Management has not mentioned the fact. Then it is treated as misstatement, and the matter is relating to company. So we give modified opinion, which can be qualified or which can be adverse. We are taking multiple scenarios to understand this. These two scenarios, are we clear with going concern? If management is giving in their notes, then we will give as similar to emphasis of matter paragraph, we'll give MURGC. If it is not updated in the notes, we will treat it as misstatement because they have not stated the fact. So then we'll give modified opinion based on the pervasiveness. Next, 701. We discuss with those governance. Okay. So what auditor has done, okay, is not available in the financial statements, and it is not a misstatement. So the matter is mostly relating to auditor's work, how auditor has addressed it. So then we will report it as CAM. SA 705, we discuss with dosha with governance. In SA 705, whether it is not available in financial statements or incorrectly presented or disclosed, then it is treated as misstatement and the matter is related to company, will give modification. 706, emphasis of matter paragraph, how it is to discuss with those charged with governance. It is also available in financial statements and there is no misstatement regarding this matter relating to company. So the conclusion is emphasis of matter. Last, SA 706, you don't discuss with those charged with governance because the matter is not relating to company. Okay, mostly relating to how audit, like consolidation, resignation, new auditor, previous auditor, etc. So then it's not a misstatement also, because the fact itself is not in the financial statements, right? It is not available, so there is no question of misstatement. That is, you will report it as other matter paragraph. So you keep this, take a screenshot and keep it with you. Okay, just give me a second and confirm whether I'm audible or not. So am I audible?
Yes, sir, audible, sir. Sir, I am see, in 706, the emphasis EOM and other matter paragraph. See, I am very clear the word EOM paragraph we need to discuss with Joe charge with governance. With respect to other matter paragraph, what we will report, I think based on our audit matter only, we will update in that other matter paragraph. Whether that other matter paragraph information is not to discuss with those charged with governance.
No need. See, it is not mandatory. Okay, if you want to, if you wish to, you can discuss. Okay, you can discuss any matter with those charged with governance. No one is stopping you as an auditor because you want to make them aware before you report something, because it is their company's going to affect with your report. Okay, so you want to discuss, you can go and discuss, but it is not mandatory that you should go and discuss, then only you should go and report it. Okay, we'll see that while we are discussing SS 706. Okay, so you can follow this for answering multiple questions and for getting more clarity also. So let us see few questions from SA 701. Pretty much the same approach or same kind of questions from simple to complex may appear. So shall we take a small break and then we will solve the questions?
Yes, sir, very much. You are allowed.
Sorry?
Yes, sir.
Okay. So we'll take 10 minutes break and we'll come back and we'll solve all the questions which are relating to SA 701. Technical team, you can start the break. So let us see first question. Let us read this question. So below is a draft extract of audit report of a listed company. Para A below reflects certain matters stated in audit report communicated with CFO of a company, and para B is in the nature of auditor's response to the said matter. So the company recognizes revenue when the control of goods is transferred to the customer at the net consideration which the company expects to receive for those goods from customers in accordance with contracts, terms and conditions, so and so. So what does auditor response? We read the company's revenue recognition policy, assess its compliance in terms of Ind AS 115. We assess design and tested operating effectiveness. We tested on sample basis that revenue has been recognized in proper period with reference to supporting documents, including confirmation from customers. Now the question is, from the description given above, identify what auditors are trying to report and under what heading such matters should be reflected in the audit report of the company. So can anyone answer? From the description given above, identify what auditors are trying to report and under what heading such matters should be reflected in the audit report of the company. So this is the only standard wherein you report what is the matter, at the same time what is the auditor response to that matter. In qualification, in adverse, in disclaimer, in emphasis, you only try to write about matter. You don't give your how audit was performed, right? Only
It would be the key audit matter.
Yes. So from the description given above, it is very much clear that they are discussing about key audit matter, because we can see this auditor response. Para B is in the nature of auditor response. So this is the only standard wherein you report both what is the matter as well as what is the auditor response to the said matter also will be reported. Next, we'll see another. So we'll move to case-based scenario. It's a straight question. Although it is case-based question, the question is very straightforward. As per SA 701, communicating key audit matters in the independent auditor's report, which of the following areas should XY and associates consider when determining key audit matters? 1. Effect of significant transactions that took place during the financial year on the audit. Areas of high risk as assessed and reported by the management expert. Significant auditor judgment relating to financial areas involving significant management judgment. So the options given is A, 1 and 3, sorry, B, 2, C, 1 and 2, D, 1, 2 and 3. So which is the correct answer?
It will be D, 1, 2 and 3.
D, 1, 2 and 3. Okay. Okay. Why not A?
Yes, sir. All, sir.
It's all. So, can you please do read the second one? Any mistake you can observe in second option or second item?
Assess risk of material misstatement should be. It should be higher.
Areas of high risk as assessed
No,
and
actually it
reported.
is by management expert, because it is management.
What is telling? Management's expert. Who is assessing high risk? Auditor or management expert?
No, sir, the point second is not right, sir. 1 and 3 is appropriate, I believe. Point A will be correct.
Here, attention to detail is necessary in this question. We have just seen the definition, what key audit matter comprises of. So here the areas of high risk assessed and reported by management expert is not a key audit matter because management expert is not the auditor, right? So let us see the answer. Answer is option A. Okay. Although the answer is not mentioning about what we have discussed, it just discussed one and uh, one and two are these are the matters which are relevant. Okay. Next question. So case number 28. So now for this, we should read the question. We cannot answer without reading the case. This is not a direct question. So quickly read the question. Ananya, statutory order of Vikas Finance Limited, predominantly operating in Bihar, Uttarakhand, Chhattisgarh, Gujarat. It is a non-deposit taking NBFC catering to credit requirements of rural and semi-urban households and provides small ticket loans. She has performed audit procedures for the year 23-24 and following further information is given as under. So board of directors, they passed a resolution on so and so date for non-acceptance of public deposit during so and so. Audit procedures performed by her including testing, design and operating effectiveness of controls relating to allowances for loan losses using expected credit loss model in accordance with Ind AS 109. Tests of details performed by her including verifying assumptions affecting expected credit loss calculations. So what is the business they are into?
Non-deposit taking
NBFC.
NBFC.
NBFC. What are they giving? What are they giving? They are giving low ticket loans. What do you mean by low ticket or small ticket loans? And
Short-term loans.
to whom they are giving these loans? To rural and semi-urban households, right? So rural and semi-urbans. So generally you will give 50,000, 40,000, 70,000, 1 lakh. Small loans you give for these people. Okay. Now, once you give this, the chances of becoming NPA is possible. The
Yes.
chances of becoming overdue is possible.
Yes.
So based on that, you are assuming or you are computing the provision. Okay. Just to use simple language. Okay. You are preparing, you are making provisions for loans. Okay. Following model, expected credit loss model. The company has obtained certificate, registration, 45 IA, so and so. It falls in the middle layer of scale-based regulations and regulation for systematically important, so and so. The company has identified instances of cash embezzlement by the year so and so 35 lakhs, 10 lakhs recovered. This we have discussed in the earlier class that cash embezzlement has happened, recovery has happened. So these are the facts given. So we understood the case at a surface level. Let us take up the question. Yeah. 20. Sorry. So read question number 2. The auditor has performed audit procedures relating to allowances as mentioned in paragraph B. As these allowances involve significant judgment and estimates, she want to state how it was addressed by her. How can she show that? How can she do that? Which option is correct? So can it be shown as emphasis of matter paragraph. What she wanted to show? She wanted to show how it was addressed by her. Is it clear?
Yeah, it would be key audit matter in that
Correct.
case.
She was telling that she wants to state not about the matter, not about allowances. She wants to state how she was addressed that matter. Okay. So she has the option of it as key audit matter, right? Because she want to state how she addressed the matter. There is no question of auditor's additional report, okay? And the emphasis of matter is about the matter paragraph, not how she addressed, okay? And 143.3 is talking about prejudicial interest to the company, personal expenditure, other items. So that is D is totally not the right section where you need to report this. Clear? Next, we'll see one more question.
So, sir, I have one query. Since it is NPFC, is that CAM is applicable for them?
Why not? Let us say this NBFC is a listed entity. There are tens of NBFCs which are listed.
And sir, CAM is also voluntary, so she can do it.
Correct. Yeah, that is fine. But is it applicable? Is it applicable? Then there are companies, there are NBFCs which are listed. Okay.
Okay, sir. Okay. It's
See,
not mandatory. It's mandatory for listed only.
yes. I'll give an explanation. There is only, I told you before coming to this question, there is only one standard which talks about how auditor address the matter. There is only one standard. Okay, SA 701. Okay, so we should give emphasis that she want to explain or she want to state how she was addressing the matter. So there is no other confusion or no other thing. You just land up in SA 701. No here and there. Okay. So the moment you see that how auditor is addressing, then SA 701 is the only standard. Okay. No need to go here and there. Next, we'll see 305 2A. So what is this question? So we have seen MCQs. Now we are seeing descriptive questions. Neptune Limited is a company that holds significant investment in portfolio of equity shares. Due to a decline in market values, the company's investment have suffered a notable diminution in value. For the financial year ended 31st March 23, the audit report of Neptune Limited included a qualification regarding the non-provision of 70 lakhs for the diminution in the value of these investments. As the auditor of financial year 22-24, how would you report in the following situations? If the company does not make a provision, if the company makes an adequate provision. Anyone? So if the company does not make a provision, is it a misstatement?
Yes, sir.
Yes. So you will report it as qualification, right? If the company makes an adequate provision, what you will do? If the company makes an adequate provision, is there any misstatement? The answer is no. Okay.
No.
So once there is no misstatement, you don't report it. Okay. So let us read B. Okay. Yeah. So probably I took that question is not related to CAM. That question is related to 705. Okay. 1 second. Okay, fine. See, so I have mistakenly taken 2A. It is also 2A, right? Okay, 1A. I took, yeah, let us read this. Instead of 2A, I took 1A. Anyways, you understood that is provision not made. Now 2A, Mr. Arjun was appointed as the engagement partner for conducting the audit of Kurukshetra Tech Limited for the financial year 23-24 on behalf of Nemi and Associates. Mr. Krishna was appointed as the engagement quality control reviewer by the firm for the said audit. So Arjun was appointed as engagement partner. Krishna was appointed as engagement quality control reviewer. The company name for which they are auditing is Kurukshetra Tech Limited. During the financial year 2024, Kurukshetra Tech Limited implemented an ERP system in phases leading to the automation of certain business process. This implementation has a substantial impact on the auditor's overall audit strategy. Mr. Arjun discussed the implementation of such a system with Mr. Krishna and also told that such matter may be a key audit matter to be reported in the audit report. Mr. Krishna considered the significance of the said matter. However, he was of the opinion that ERP implementation did not appear to link with the matters disclosed in the financial statements. And so, there was no need to disclose such matter as a key audit matter. Whether the contention of Mr. Krishna is appropriate with respect to the matters to be communicated as key audit matter. So, there is a dispute between, or there is a conflict between engagement partner and engagement quality review partner. Engagement quality review partner is telling ERP implementation is a significant matter, so you do it. Engagement partner is telling that this is not appear to link with the matters disclosed in the financial statement. So should we report it as scam or not?
Yes, I think there would be effect on the audit because of this significant event of implementing the
See, ERP implementation, what we should see, the first point I told you, yes, it's a significant event.
Yes, sir.
Does it affect the audit? Does it affect the audit of financial statements? That we need to emphasize. So here he is telling, however, he was of the opinion that ERP implementation did not appear to link with the matters disclosed in the financial statements. What is your view?
Sir, the thing is that here two parties coming as part of 701 and SQC1 also is applicable over here. See, I see in the 2 points. Point number 701, the effect on the audit significant.
SQC1 is for the firm, is not for the engagement. Okay.
Sir, SQC wants also overall control when it talks to when there is a conflict between the partner, that engagement partner and the ECQR, it has to be dealt with properly. When there is a differences, see, that has to be resolved first. If there is a conflict between them, then it has to be discussed with the external party also. We need to take the legal advice, or we can go beyond the professional body also. We have to solve it.
Here. Yeah, you are right. But here the facts were not there. Okay. So you should see now. You can mention that facts, but finally, whether the contention of Mr. Krishna is appropriate with respect to the matters to be communicated as a key audit matter. So now the question itself, they have framed and mentioning that as is it appropriate to communicate as key audit matter, or is it not appropriate to communicate as key audit matter?
Yes, sir. It is appropriate to communicate as a key audit matter, since the thing is that the effect on the audit of significant events on the transaction that occurred during the period, which means the shifting from one software to another software. It definitely, that as we discussed earlier, the thing is that is opening balance, whether it is getting it's giving the effect.
Don't link my example with this question. Okay. Did they say they are changing books of accounts from Tally to SAP? No. Did they say that? They didn't say that. In my example, I said it. Okay. Second, he is telling he was of the opinion that ERP implementation did not appear to link with the matters disclosed in the financial statements. He is telling that there is no linkage. Okay, that means this ERP implementation would be done for some warehouse, some automation, some other thing, right? Okay, so we should give emphasis to this line. ERP implementation did not appear to link the matters disclosed in the financial statements. Okay, so let us read the answer so that you'll get more clarity.
Okay, sir. Since it is not linked to the financial statement, so it is not needed.
It is not needed. Okay, so that is what the answer says. I'll take you to the answer so that
Got it, sir. See, read the line between the each word are very, very important.
yeah, attention to detail. Okay,
Yes,
so
sir.
yeah, so much. Okay, so he started with answer SA 701 what it says, and it tells all the three items what we have discussed. Okay, and then they take it as to this, and yeah, the fact that these considerations are required is not intended to imply that matters related to them are always keyword matters. Matters related to such specific considerations are keyword matters only if they are determined to be of most significance. In addition to matters that relate to specific required considerations, there may be other matters communicated with those charged with governance that require significant auditor attention. So again, he's explaining about SA 701. Yeah, now here's the conclusion. In the given case, there was implementation of ERP system in the company, due to which some of its business process got automated and which had significant effect on the auditor's overall audit strategy during the period. As per Mr. Arjun, engagement partner, above mentioned matter can be considered as key audit matter and should be reported in the audit report since it requires significant attention that had affected his overall audit strategy. Mr. Krishna, EQCR, considered the significance of the said matter. However, he was of the opinion the same thing. Therefore, no need to disclose such matter as key audit matter. In view of the above, the contention of Mr. Krishna is not appropriate as the matters that do not link with the matters disclosed in the financial statements can also be considered as key audit matter if it requires significant attention. So what does this says? The contention of Mr. Krishna is not appropriate as the matters that do not link with the matters disclosed in the financial statements can also be considered as key audit matter if it requires significant attention. So what does he says? It can be considered as key audit matter. Finally, is that clear? So we'll see the next question. 232. So what does that says? Last example, are you clear? Last example is fine?
Yes, sir. Fine, sir.
Yeah. Should we go through once again?
Yes, sir. Give only the final outcome, sir.
Yeah, let me tell you once again. Okay. Sorry. So can also be considered as a key audit matter is what they're telling. Okay. But here we should also observe the definition says effect on the audit of financial statements. So here they are telling that it requires significant attention that had affected his overall audit strategy. So what he's telling is this impacts the overall audit strategy. So it impacted audit. So once you read the question again carefully, although it is not appear to link with the matters disclosed in the financial statements, it says it requires significant attention that had affected his overall audit strategy. So this part, the first part which we discussed, effect on the financial statements, it does not have effect on the financial statements. So you can see it here. In the given case, there was implementation of ERP system in the company due to which some of its business processes got automated, which had significant effect on the auditor's overall strategy during the period. So what was I mentioning? I was mentioning that, does it have effect on the financial statements? It does not have effect on the financial statements. However, it does have effect on the audit strategy. Okay. So if we go back to the question again, so it says, see, we were discussing this part, right? So the implementation had a substantial impact on the auditor's overall audit strategy. So this is what we need to emphasize. So we were in the loop of ERP implemented. So let us go for key audit matter. This is not the reason for which they have went to key audit matter. Is that clear? They went to key audit matter because it affects auditor's overall audit strategy. This ERP has not given impact in their financial statements. So audit includes planning, audit includes execution, audit includes reporting. So it is not affecting my reporting, but it is affecting my overall audit strategy, how I'll perform risk control, risk assessment procedures. So there it has taken that point and it has to be reported as CAM. Clear?
Yes, sir. Not directly linked to the financial statement. However, the overall audit
strategy.
Okay.
Okay. Next, 232. So here it's again okay, fine. So while conducting audit of CGX Limited, a listed company for year so and so, CA Srishti notices that company has extinguished following material liabilities unilaterally without entering into settlement with creditors and reported this amount as gains under other income. These details is follows. Okay, so what they're telling? Sri Srishti notices that company has extinguished following material liabilities unilaterally. What does this mean? What does this mean?
That they have taken this decision on their own without.
Correct. What is the decision they have taken?
Discussing.
What is the decision they have taken?
Just adding it to the income without considering a discussion with creditors.
Correct. So we have certain liabilities which company has to pay, but without discussing with them unilaterally, without discussing them with the creditors, company has decided and go ahead and booked it as other income. We call it as write back. Okay. They have done write back. How much? For raw materials, 3.5 crores. For capital goods, 2 crores. Total 5.5 crores. Management is of the opinion that these dues are no longer payable. Therefore, retaining these liabilities on financial statements would lead to overstatement of liabilities. Extinguishment of liabilities was made by the company in accordance with normal trade practices, and outstandings were written back after stopping dealing with such creditors. She wanted to send external confirmation request to such creditors. However, management informed her that sending such request may be used by the creditors as proof of existence of liability. She is contemplating inclusion of above matters under key audit matters in audit report. Analyze the situation threadbare. So what has happened? Now she is the CA who is involved in this audit. She is contemplating inclusion of above matters under key audit matters in audit report. Analyze the situation threadbare. So what has happened? So what is your answer? So they are telling 5.5 crores they have write back without talking to creditor. Is it okay? Is it not okay?
Not okay, sir.
Not okay. So
But there is a line that it is a normal trade practice.
yes, it's a normal trade practice. Okay. But she wanted to send external confirmation requests to such creditors. Did management allowed her to send requests?
No, they are
Management
requested
told,
not to
management
send.
told, don't send. So now, is it the liabilities which were mentioned in the books, is it correctly stated or is it misstated?
Sir, that the possible effect is not unknown. Say, not getting the evidence at all as per the 505.
Correct, correct. They sufficient and appropriate audit evidence was not received, okay, with which there is possible effect of misstatement. Rightly said, possible effect of misstatement. So are we discussing about how auditor resolved it, how auditor ensured it, or are we discussing about misstatement? We are discussing about misstatement. Okay. But in the question, they took the route as key audit matter. Okay. So
Yes, sir.
the student, while attempting the question, he will be in the loop of that key audit matter. He'll be revolving there. But actually, what has happened in the question?
Actually, it is not at all a key audit matter.
Correct. It's a misstatement, right?
Like we have to analyze if it is a misstatement or not. That is
Yeah, but see,
quite subjective.
because of non-availability of sufficient and appropriate evidence, okay, there is a possible effect of misstatement, right? So CA Srishti wanted to send external confirmation, so and so. Okay. Keeping in view above, her contemplation of including above matters under key audit matters is not proper and it is not in accordance with SA 701. It states that the auditor shall not communicate a matter in the key audit matters section of the auditor's report when the auditor would be required to modify the opinion in accordance with SA 705. As a result of the matter, communicating key audit matters is not a substitute for the auditor expressing a modified opinion when required by circumstances of a specific audit engagement in accordance with SA 705. So the scope which we have discussed, can a key audit matter is a substitute for SA 705? The answer is no. Okay. So it is just the examiner is trying to tell you, okay, although there is a misstatement appearing, okay, from the question, if I tell you key audit matter, will you write the answer as key audit matter or will you again go back and apply the fundamentals of assessing whether it is a misstatement or not? Okay, that was checked here. Clear? Any doubts here? Next. One more question we'll see. So let us read this. This is also a direct question. In the above given case, what should be the next course of action on the part of auditors of JMP Limited when the auditors conclude that the reason for management's refusal to allow to send the confirmation to the debtors is unreasonable and the auditor is unable to obtain relevant and reliable audit evidence from alternative audit procedures? So what has happened? Management has refused to allow to send the confirmation to debtors, right? So you tell me how auditor has to take care. Can he report it as 705? Can he report it as key audit matter? Can he report? Can he take that in written confirmation, written representation? Can he report it as emphasis of matter paragraph?
Sure. Whenever there is that management is not allowing to send the confirmation, then there is a limitation. He has to do the further audit procedure. The alternative, the thing is that in a month, while or after, is there any collection evidence or possibilities is there? Based on that, he can come to conclusion.
Yeah.
Otherwise,
see, yeah, you are right. You read this. Auditor is unable to obtain relevant and reliable audit evidence from alternative audit procedures also. You miss this line. So confirmations was not, management is not allowing. Second point is, as you are telling, is there any alternative audit procedures like subsequent receipts mapping or some alternative evidence? That is also missing. That is also auditor is unable to obtain. So is it 701? Is it 706? Is it 705? Or is it, can you keep quiet by just taking written representation as per 580?
It should be A7.
Yes, 705, sir.
It will be 705. Okay. So 701 will be given as an option multiple places, but we need to assess, okay, whether it is a misstatement or whether it is matter related to audit, how audit has performed his procedures in order to get comfort or in order to ensure that the financial statement line item is free from material misstatements. Okay. So next, so although we have done so much discussion on 705, okay, indirectly when we are discussing 701, we will discuss, there are more to discuss in 705, which we will discuss now. So we will be discussing objectives, we will be discussing types of modification and how we can discuss, how we can decide which type to use, when to use. Then we'll go how reporting will take place. Then there are certain miscellaneous topics like scope limitation we have just discussed, how auditor has to perform, what steps auditor has to perform in case of scope limitations. If auditor wants to withdraw from the audit, what are the procedures he has to perform? When he is giving adverse and disclaimer opinion, okay, can he give a separate report for separate elements, for specific element? That also we'll discuss in miscellaneous topics. So let us first discuss objective. So the objective of the auditor is to express clearly and appropriately modified opinion on the financial statement that is necessary when the auditor concludes based on the audit evidence obtained that the financial statements as a whole are not free from material misstatement. So I want you to recall the first objective of SA 700. Okay. So it has 4 parts: opinion, evaluation, conclusion, audit evidence, right? So we need to apply it here. So here, what auditor is concluding? Auditor is concluding, okay, the third part, auditor is concluding based on the audit evidence, sorry, second part, auditor concluding based audit evidence obtained that the financial statements as a whole are not free from material misstatements. So audit evidence is obtained. The first part, audit evidence is obtained, verified. What is the conclusion? Conclusion is it is not free from material misstatement. Okay. If that is the case, then you need to give modified opinion. Which modified opinion we'll see in few moments. Okay. But here audit evidence is properly obtained. But the conclusion is it is not free from material misstatement. Next. Unable to obtain sufficient appropriate audit evidence. Second question is audit evidence itself is not received. Audit evidence itself is not received, but we should understand in absence of audit evidence, without receiving audit evidence, there is a possible effect. Okay, auditor is concluding that financial statements as a whole are free from material misstatements. Okay, to conclude that unable to obtain sufficient audit, to conclude that financial statements as a whole are free from material misstatements. Auditor does not know that there are free, whether it is free or not. Okay, auditor does not know. So these are the two scenarios. Okay, two conclusions. Based on these two conclusions, we need to select appropriate opinion. Okay, so objective is based on this, you need to pick or you need to select appropriate modified opinion. What are the modified opinions? Qualified, adverse, disclaimer. Out of these three, you should pick one. Okay, how to pick one that we'll see in the next slide. But the basis is this. One first case is you obtained audit evidence and you are concluding that there is a misstatement. Second, you have not obtained the audit evidence and you don't know whether misstatement exists or does not exist. So this is very important thing. So the first one is the auditor's judgment, pervasiveness, effects or possible effects. So when do I use the word effects? When do I use the word effects? I know it is affected. I know very much it is affected. When do I use the word possible effects? I am guessing and I am assuming that it may affect. Okay. So when I obtain the audit evidence, I use the word effects. When I have not obtained sufficient audit evidence, then I use possible effects. So I know that misstatement has happened. When will I conclude this? When can I conclude? When I received audit evidence, right? When I received audit evidence and I conclude there is a material misstatement, then either I can give qualified opinion or I can give adverse opinion. In the first row, audit evidence is received. Audit evidence is received and auditor is sure that material misstatement has happened. If it is material but not pervasive, then you give qualified. If it is material and pervasive, then you will give adverse. What is pervasive? We'll see. But what is the first row? Can someone repeat what is the first row describes?
Having obtained the audit evidence, in the first case, it is material but not pervasive, we will give qualified opinion. And in another case, it is material and pervasive both. Then we will give adverse opinion.
Correct. So now, if we go back, option A and clause A and clause B, objectives, if you take, the first clause is talking about qualified opinion and adverse opinion. The second point is describing qualified opinion and disclaimer of opinion. Okay, based on pervasiveness. The first point is we are concluding, auditor is concluding based on the audit evidence obtained. So first case, audit evidence is obtained, conclusion is derived, evaluation is done, and finally opinion was made. Second case, audit evidence itself is not available. However, but you should make some conclusion, right? So that conclusion, you are making it, okay? Conclusion, how can you make? You can only think, you can only make possible effects. So the second row, Second row, if I want to highlight further, the possible effects is relating to second row, right? Fx is relating to first row because you know the effect audit evidence is obtained. When audit evidence is not obtained, you doesn't know. You are just thinking this may happen. Okay. Let us take one example. First case, very clear. You know that 10 crores worth of data confirmations was not received. Okay. You know inventory is overvalued by 2 crores. You know, in the simple case, what we have discussed, trade payable 5.5 crores worth without talking to, without discussing with, without taking confirmation from creditors, these people have showed it as income. So audit evidence is very much there, misstatement is there, material misstatement is there. Now you should only check pervasiveness. So this case you stick to first row. First row is there is misstatement, there is material misstatement. Whether it is pervasive or not, you will check and you decide whether it is a qualified or adverse. Next case, you are inability to obtain sufficient appropriate audit evidence. Management is not allowing you to send, okay, confirmations. Now, the debtor who has the amount, okay, how much is the amount? Let us say 10 crores is the closing balance of trade receivables. You have roll out balance confirmation for 8 crores. Now, for 7 crores you received, 1 crore you have not received. Okay. So 1 crore you have not received. What could be the difference in the balance confirmation? Probably 5 lakhs, 10 lakhs. Okay. You can anticipate the difference, but can you know the difference, exact difference? You don't know, right? So 1 crore worth debtor who has not given balance confirmation, do you know how much is the impact? Do you know the effect? You doesn't know. You can only guess possible effect. Okay. Cost versus NRV. You know the NRV is there, you know cost is there, and you know the amount. This much is overstatement, this much is understatement. So effects and possible effects are two different things. Effects is hardcore fact which you already know. Possible effects is based on experience, based on the audit process you have performed. You can anticipate how much could be the effect on financial statements, how much could be the misstatement happened. Okay. So let us understand in the second row, it is possible effects. If you think that is material, it is qualified. If it is immaterial, you will give clean report. If it is material and pervasive, then you will go for disclaimer of opinion. When they will give disclaimer, when I ask sales invoices, client is refusing to give. When I ask bank statements, client is refusing to give. When I ask physical verification of inventory, client is refusing to give. When I ask physical verification of fixed assets, client is refusing to give. So many items client is refusing to give, then you will give disclaimer of opinion. Let us say only trade receivables for 4 customers is not giving. Okay, you stick to qualified opinion if it is material. So any doubts with regard to this? With regard to objective and with regard to types and how to determine? Any questions still here?
No, sir. Clear, sir.
Yeah. So now we will discuss more about pervasiveness. We know what is material. We know materiality. We studied materiality, which affects decisions of users. Okay, that we call it as materiality. But what is pervasiveness? So pervasive is a term used in the context of misstatements to describe the effects of financial statements of misstatements. Okay, again, pervasive is also twofold. See this. One, they are telling effects, another they are telling possible effects. Okay. In context of misstatement to describe the effects or possible effects. Okay. Now, what it is? If you go into details, pervasive effects on the financial statements that are those that in auditor's judgment are not confined to specific elements, accounts or items of the financial statements. So what are they trying to tell? They are telling that if misstatement has happened or if possible effect has happened, not for single line item, not confined to one item, multiple line items, then you say it as pervasive. First. Second, if so confined, represent or could represent a substantial portion of financial statements. So first scenario is pervasive. You can assess pervasiveness if the misstatements happening in multiple places. Very easy to understand. Second, if it is not for multiple items but for one item, however the item which is there is huge. Out of total assets, let us say I have 50 crores is my total assets. My balance sheet total is 50 crores. My inventory is 32 crores. So 60% of my assets are inventories. So if I don't get adequate information with respect to inventories, then it is pervasive. Why I am telling it is pervasive? It is not only material, it is pervasive. Okay. So you understood the second point? When we say pervasive when it is affecting multiple items. If it is not affecting multiple items, it is affecting single item, but that item is substantial portion of the financial statements. Clear? Next, in relation to disclosures are fundamental to users' understanding of the financial statements. So, example, the fundamental accounting assumption which is going concern. If something is going wrong with going concern, if you feel there is uncertainty towards going concern, it is management responsibility to disclose that fact, but they are not disclosing. Very fundamental to disclose, but they are not disclosing. So then also you can say it is pervasive. So going concern which is having an impact, you should disclose, management has to disclose, that has not disclosed, that is also leads to pervasive. So these are the three items auditor should keep in mind to assess pervasiveness. Hope it is clear. Any doubt?
Yes, sir. Clear, sir.
Yeah. So now before going to this, I just want to show you how actually pervasiveness looks like. Okay. Not only in India, okay, but also globally, whoever is complying with international standards on auditing, the language is consistent. I discussed 700 purpose, okay. So they are also, this is not Indian company, okay. So independent auditors report to the members of SEN-U Holdings Limited, report on auditor financial statement, they have given disclaimer opinion, okay. So they are telling that we are auditing so and so company. This I'll again reiterate. We have conducted the audit. When we are writing, we have conducted. But disclaimer we will give, we were engaged through audit. Okay. I don't want to discuss detail. I just want to give you, this is disclaimer opinion. Now see, basis for disclaimer. First point, opening balances, sales purchase with certain customer suppliers. There is a problem. Second point, revenue and cost of sales. There is a problem. Okay. In two we have again, they have breakup. Okay. In second point, revenue recognition and payments received. There is a problem. They have not received the information with regard to documents like sales invoices, like payments received. I'll share it with you anyways. You can go through. I'm not able to see B. They have directly jumped to C. So C, cost of sales, there is an impact. B, they have given here, B, cost of sales, okay. Ongoing criminal investigation happening on the company, okay. For that, you need to supply some information. They are not giving that information. Joint venture arrangement, they are doing some joint venture arrangement. Regarding that, they have not given details. Existence, valuation and completeness of inventories, they could not able to assess. Sixth, valuation and impairment of assessments of non-financial assets, there is a problem. Going concern assumption, there is a problem. Okay, 7 concerns they have. 7 concerns. Do you think this is pervasive?
Yes, sir.
Definitely it is pervasive, and this is regarding receipt of information. So they have given disclaimer of opinion. Okay. Multiple line items. For each line item, okay, there are some issues. Next, let us see adverse. This is from another country again. So adverse opinion. PP, there is problem. So here, there is, now you see the language. We have audited the financial statements. Okay. Why you are using the word audited? Because sufficient and appropriate audit evidence was provided to auditor. He has received it. He has reviewed it. He has verified it. Why is the language change here? Have you done the audit? Have you done the audit in disclaimer of opinion?
No, sir.
You have not done. You have just engaged to audit. You have not completed the audit. Okay. The language, you should give importance to language. Okay. We'll again stress on that language once again. So adverse, why they are giving adverse? They have got the evidence, all the evidence. Okay. Now basis for adverse. PP, there is a problem. Accounts receivable, there is a problem. Receivables, there is a problem. Inventory account, there is a problem. So multiple line items, there is a problem. Hence, they gave adverse opinion. They gave adverse opinion. Okay. Is that clear? Okay. So, I will show you one more report. Okay. Although it is said as qualified opinion. Okay. There were 12 qualifications. 12 qualifications. Okay. So there are multiple companies. This is Indian company. Okay. So 12 qualifications, still it is a qualification. It is not adverse. So don't assume that, okay, if there are more items, it is, I'll explain. See, is this a qualified opinion, right? Okay, we have audited here. Now what has happened here? See, basis for qualified. First qualification, second qualification. First is with regard to cost of lands. Second is with regard to fixed assets. Third is with regard to short-term loans and advances. Fourth is with regard to investments. Fifth is with regards to trade receivables. Okay, CWIP. But still auditor feels it is material but not pervasive. So it is judgment of auditor to check material and pervasive. Okay. Next. So hope you got some clarity here. Now, so how to report this? How it differs? This is important, very important. The language is very important if you going to ask. Okay. So these are the elements which we have discussed. SA 700. Should we give title, address, the auditor's opinion, etc.? Yes, right? SA 705, qualified opinion. How do we address? Should we write opinion or should we write qualified opinion?
Qualified opinion.
Qualified
Should we write
opinion.
basis of opinion or should we write basis for qualified opinion?
Basis for
Basis
qualified
for
opinion.
Correct.
qualified opinion.
So how do we write in case of adverse? If it is auditor's opinion?
Adverse opinion. Basis for adverse opinion.
Correct. How do we write if it is disclaimer of opinion?
Disclaimer of opinion and basis for disclaimer of opinion.
Yes. So can we give going concern, emphasis of matter paragraph, key audit matter paragraph when we are giving disclaimer of opinion?
No, sir.
We should not give. Okay. We should not give. Okay. Because we are telling it is material and pervasive. You are telling to readers, I have not got information, not for one invoice, not 10 invoices, not one line item, not 5 line items. Okay. Pervasive. You understood? And now you are going and giving going concern. Now you are going and giving emphasis. That is not correct. Okay. Next. So this also will be helpful for you guys. So you can, if you want, you can take a screenshot. Anyways, I discussed this presentation will also be shared with you guys. So no problem. Next. So here you are talking about the headlines. Now we will go into details, the content. In case of qualified opinion, before going to qualified, first we'll understand how we give a clean report. What is the language we use? We have audited the standalone financial statements of company. So we should write which financial statements we are auditing, which company we are auditing, what it comprises of. We need to give details. So which financial statements we are auditing, which company we are doing auditing. This financial statements comprises of what? It comprises still here. Balance sheet, profit and loss account, statement of change equity, cash flows, notes, significant accounting policies, other explanatory information, what it comprises of. Finally, coming to opinion paragraph. In our opinion, and to the best of information and according to the explanation given, the aforesaid financial statements give a true and fair view. You are giving a clean report without any qualification, in conformity with accounting principles accepted in India, of the state of affairs of balance sheet, which is closing on 31st March, profit or loss, means if company is making profit, you write profit. If company making losses, you write loss. Because you have already seen the profit and loss account. Now you need to write what is it, whether it is profit or loss. Choose one. Changes in equity, state, cash flows for the year ended. So all these things represent a true and fair view. Okay. This you mention while giving a clean opinion. Now, qualified opinion, you no need to put more effort. All the effort was already done. You give the
Sir, one thing, are you showing anything to us? Not visible anything. Just you are explaining.
Oh, I'm sorry. I already.
See, it's only in the Microsoft we can able to see.
1 second. I'm very sorry. Now you can see.
Yes, sir. Very much.
Yeah, very sorry. I'm very sorry. Yeah, technical problem. Because well, fine. Okay. So now I'll repeat before we understand how. Okay, so you have not seen this?
No.
No, sir. We've not seen.
Okay. You have seen this, right?
Yes.
Sir. Yes, sir. This is very clear.
Up to this you have seen, right?
Yes, sir. And also that some of the company, that 3 company you saw disclaimer of that.
Yes. Now you see this. I'm sorry. Yeah. So how to report, how it differs. So you have these elements, right? So SS 700 you show like this. SS 705 you give headers. SS 705 adverse. If it is qualified, you give qualified basis for qualification. Adverse, you will give adverse and basis for adverse opinion. Disclaimer, without seeing you are answering. Okay, great. So next. So this is the thing which I am showing and I am discussing. So this slide is clear now?
Very much clear, sir.
Yeah. Next, this is what I am talking about. If it is a clean report, you write which financial statements, which company, which year, what it comprises of. Then you start here you start your opinion. So you tell readers, see, in my opinion and best of information and according to the explanation given by them, it gives a true and fair view. What gives a true and fair view? The balance sheet ended on this date. The profit or loss, you need to choose only one. Either the company make profit or loss, right? So generally you choose, if it is profit, you choose profit and cash flows. All these are representing true and fair view. Okay. So this is how you give a clean report. Now, qualified, what you will give? Copy paste. Copy paste. But the important paragraph, you copy paste and you insert this. Just see, both are side by side. If you want, I'll erase what I just did. So if you see, if you read everything what we have just discussed in SA 700, we will also give it in SA 705. Okay. Read this. In our opinion and to the best of our information and according to the explanation given to us, stop it here. Okay. So now read this. In our opinion and to the best of our information and according to the explanation given to us, okay, the aforesaid financial statements, it continues. So we are not deleting anything from our clean opinion. We are adding, except for the effects of matter described in basis for qualified opinion section of our report, rest everything is giving true and fair view. So side by side, you have both the header section, opinion section and qualified opinion section. There is nothing you will change when it comes to qualified opinion. You will just insert one more item, which is what has gone wrong. Okay, what was the misstatement you are talking about? That much you will add up. Rest, the thing is, rest of the balance sheet is true and fair. You are telling the readers, rest of the balance sheet is true and fair. Don't worry. Only one item there is a mistake, or only two items there is a mistake. Clear?
Yes,
How
sir. Clear.
reporting is done? Next.
Yes, sir. Very much clear.
Now, yeah, next is basis for opinion. So how you give in clean report versus how you give in qualified opinion. So qualified opinion, you again do copy paste. You again do copy paste. You can see it here. Because of space, I have not mentioned everything. So you will write whatever you are writing in clean report, you will mention that also, because you have conducted your audit in accordance with standards on auditing. Your responsibilities under those standards described so and so. You should be independent and ethical in qualified opinion also. Everything is pretty much same, but you will write what misstatement has happened in detail. You will give that details, what misstatement has happened, whether inventories are overstated, whether debtors are understated, whether what is the problem, you will write in the qualified opinion. In addition to that, you will give the same statement. Clear? Next, we'll see adverse opinion. Adverse opinion, again, the language of clean versus this. So here, instead of giving true and fair, you are telling it is not true and fair. Do not give a true and fair view. This is very important. Because of the significance of the matter discussed in the basis for adverse opinion section of our report, the aforesaid financial statements do not give a true and fair view. Here, if you see, we have audited. There is no change in paragraph, no change in this section. Even in qualified, there is no change. But in coming disclaimer, there will be change. You can observe there. Okay. So what I'm referring to, there are multiple items which I faced trouble or which there is a misstatement. So go and read basis of adverse opinion section. You will get to know why I am telling there is no true and fair view. I am just telling the financial statements are not true and fair view. Why? The matters are described in basis of adverse opinion. Let us see what are those matters. So basis for opinion, how do we report that? So again, you report same thing here, but you will give details of, see, company inventories, there is a problem. Revenue, there is a problem. And revenue and receivables, trade receivables are overstated. So once your revenue is overstated, your profit and loss account increased. Okay. Trade receivables are overstated, your assets are increased. So the effects are at multiple places. Once effects are at multiple places and the amounts are huge, then it is material and pervasive. So you are telling your readers, see, these are all the reasons for which I believe it is material and pervasive. And finally, I told you that in the opinion for adverse opinion, I am mentioning that this financial statements does not give true and fair view. So this is how you should report it. Clear? So what is the difference between qualification and adverse while it comes to reporting? First change is not only you are giving reference to basis for adverse opinion, you are also telling it is not giving true and fair view. In qualified, you are still telling it is true and fair view. Okay. Next, the last disclaimer of opinion. In clean report, you have say we have audited. Now there is a change. We were engaged to audit. You have not received information. How can you say you have audited? Because audit was not done at all. Okay. So this is how you report in case of disclaimer of opinion. Next. So you should mention that. Are you mentioning true and fair view? We are telling.
No, sir.
We are telling we are not in a position to give opinion. Okay. We do not express an opinion. We do not express an opinion because information was not supplied. Management, I don't know whether it is true and fair or not. I don't know. In qualified, I know it is not true and fair. In disclaimer of opinion, I don't know. Okay. We do not express an opinion on the accompanying financial statements. We are not telling positive. We are not telling negative. We are just giving disclaimer. I don't know. Okay. So we do not express. Clear? So in case of disclaimer, sorry, you will say that the company's accounting records have not been properly maintained to substantiate balances of trade receivables, trade payables, loans, borrowings. Okay. You can ignore this. Okay. So company's accounting records have not been properly maintained to substantiate balance of trade receivables, trade payables, loans, borrowings, bank balances. So we were unable to obtain sufficient appropriate audit evidence. Okay. So we cannot able to ensure accuracy. We could not able to ensure completeness. Hence, we are telling you we do not express an opinion. Okay. So this is about how we report qualified, adverse and disclaimer of opinion. Next, we'll see 3 more miscellaneous topics which are there in exercise 705. This will be answered by you guys only. It is very simple, very easy and very quickly we can discuss. So consequence of an inability to obtain sufficient appropriate evidence due to management imposed limitation after the auditor has accepted the engagement. So just whatever comes to your brain, you just tell me. Auditor has accepted the engagement. Now management is not giving you information. What is the first step you do?
Sir, first step, if the limitation is fully, they are not allowing to do, then we will think for the withdrawal. If the law and regulation is accepting.
You don't jump to withdrawal. You don't jump to withdrawal. First, you request management to lift the limitation. First, we will talk to the person who imposed the limitation. Please remove the limitation. Okay. First, we will tell management. First step. If management is not listening, you go to those charged with governance. Management is different, those charged with governance different. If it is different, if it is same, no more discussion, right? If it is different, you go to those charged with governance. You inform them. They can resolve, they may not resolve. If they resolve, let us say if they resolve, fine. If they don't resolve, then you go for, you have 2 options. Either you report or withdrawal. If you can withdraw, resign, withdraw. If withdrawal is not practicable, if law is not permitting you to withdraw without giving a report, then what you will do? Then you will assess. Then you will assess whether this evidence which was not given, is it just material or is it material and pervasive? If it is material, give qualified. If it is material and pervasive, give disclaimer. Let us see quickly. Limitation identify after accepting audit. Auditor becomes aware that management imposes scope limitation. He identify that. He is telling, don't review these documents. He is telling, confidential, I won't give this information. He is telling, I want to go to do inventory verification. No, you cannot go to that branch. Even if you go, if they will not allow you, they will tell you to stand outside. Okay. You ask for request removal. You are telling them, please remove the limitation and give me supply information. Not listening. Inform to TCWG. Unless TCWG is management. Okay. Alternative procedures. You perform alternative procedures. Check any other procedure is available or not. Do it. Not. Okay. Evidence is still not sufficient. Determine the implications. Material but not pervasive qualified. Material but unpervasive. Withdraw from the engagement if followed by law, or disclaim opinion if withdrawal is not practicable. So these are the steps you need to follow in case of scope limitation. Directly jumping into withdrawal is not right. Okay. So even if it is a qualified opinion, you are not going to withdraw. You are giving a qualified opinion. Only in case of material and pervasive, you are thinking of withdrawal. Clear? Now question comes withdrawal. Before withdrawal, what you should do? You should communicate to TCWG and explain what are the reasons for withdrawal. But law like SEBI has issued some circulars not to withdraw without giving reports. What is SEBI telling? If resigning within 45 days from the end of the quarter, he must issue audit or limited review report for that quarter. Let us say we are in the month of June. And July 15th, auditor wants to withdraw. Can he withdraw in case of listed entity?
No, sir.
So he should give limited review report of Q1 and then only he can leave. Okay. He should give limited review report of Q1. Okay. Because April, May, June, July happened. Within 45 days, the resignation happened. So he should issue Q1 limited review report, then only he can leave. After 45 days, what he should do? He should give reports of, let us say, April, May, June. He has not mentioned in the month of July. He mentioned in the month of August to 20th. When he is telling withdrawal, August 20th. Can he go now? He cannot go.
No, sir.
So what are the reports he should issue?
The second quarter as well.
He should issue report of Q1 as well as Q2. Okay. Next, if reports for all 3 quarters have already been issued, Q1, Q2, Q3 limited reviews are already been issued. Now can you escape? No time limit. You should complete full year audit and then only you can resign.
Yes.
Okay. So one more quick announcement from ICAI is, any auditor, if they want to resign, they cannot mention professional preoccupation. They should give actual reasons. What is the risk you are facing? What are the concerns? Is it management override? Is it not providing of information? Is it of pending litigations? What caused you to resign? So don't give vague reasons in resignation. Okay, professional preoccupation. I have some other job to do, so I am resigning here. That is, you are finding an escape route. The auditor is finding an escape route. So ICAI has given an announcement to all the auditors that don't just write vague responses, write clear responses so that other auditor will get saved. Correct or not?
Yes, sir. Exact reason to be updated.
Yeah. So next, third miscellaneous topic. So when you give adverse opinion, when you give disclaimer opinion, can you give an unmodified opinion with respect to same financial reporting framework on a single financial statement? or one or more specific elements, accounts or items of financial statements. I'll give an example. Let us understand. You have given adverse opinion. Now, you faced problems in trade receivables, trade payables, fixed assets, borrowings. Now, banker wants inventory position. Banker wants inventory position. Okay. So, client is requesting auditor, sir, you are giving adverse opinion, but my inventory is fine. Na? Just give me clean opinion. Okay. That my inventory is fine. Inventory is accounted as per AS2. You give me one certificate or you give me one audit report on inventory. Can you give that?
Yes, sir, it can be given, but it's not on the same date.
No. You cannot give because if it is same financial reporting framework, you cannot give one or more specific elements or accounts or items of financial statements. Okay, when if it is a qualified opinion, you can give. But if it is an adverse opinion, if it is a disclaimer of opinion, you cannot break the financial statements and you cannot give piecemeal reports. Inventory is fine, others are wrong. Debtors are fine, others are wrong. You cannot give that. Okay. So it shows you are contradicting your own auditor's adverse opinion or disclaimer opinion on the financial statements as a whole. So that causes contradictory. So you cannot issue. Clear? So this is with respect to 705. We'll see questions. So you can take a screenshot and you can, we have already seen certain questions. Okay. So you can treat it as a homework. If you want, we have already covered few cases of SA 705. Okay. So do it as homework. In the next session, we will see any questions you have got in SA 705. Okay. So what have we covered today? We have covered audit versus certificate. We have covered what is notes, what is qualifications, what audit report. Okay. We have covered SA 700, objective and purpose, which we have also linked it to SA 705. We have covered SA 701 in detail and we understand key audit matters. Then we have come to SA 705 and we understood, along with miscellaneous topics, we understood SA 705. So this is homework for today. So next, we will be, in the next class, we will be discussing SA 706, SA 710, SA 720. Okay. So these are all what we are going to discuss. And
now it's time for MCQ.
Yes, ma'am. Thank you, ma'am. Yeah. Thank you for reminding us. So quickly we'll see the MCQs.
Sir, that one thing lastly we discussed on the adverse opinion and disclaimer opinion, when the special purpose audit and other things, I mean the single financial component when you are giving the report, the report should not be contradictory, right? The one way, see, the inventory item alone is giving that there is no effect, no material effect, which means that material uncertainty, everything is perfectly is given. In that case, can we give the clean report like that?
We cannot. See, on the overall financial statements, you say it is adverse. Now you are coming and giving another piece, okay, from the same set of financial statements on the same framework, you are telling this piece is fine. Okay. So even if you look at professionally, that is incorrect. The standard is telling you not to give. Just look at your own report. I have given report.
Okay. Okay, sir. I'm fine. Disclaimer of opinion, it's okay. When talk about the adverse opinion, whether still that statement is hold good?
Yeah, it is hold good. You understand material and pervasive. Once, let us say you are giving pervasive means it in a way affecting entire financials, right? Multiple line items. I'll give an example. If something goes wrong in revenue, will it not impact inventory?
Yes, it will impact.
My cost of goods sold. If something wrong happens in cost of goods sold, will it not impact in my inventory? Do you think, is there a single line item, okay, which is completely isolated from the financials? Debtors is not linked to revenue.
Yes, sir, everything
If
is
debtors is
interlinked.
problem, if debtors is problem, my revenue is problem. If revenue is problem, indirectly my inventory is problem. You understood?
Yes, sir. But
So
sir, I am thinking that why I am asking this question. Say, example, one person is asked us to value the fixed asset alone. We value the fixed asset. Everything is correctly is mentioned. But however, we given the adverse opinion. In this case, can we give the clean opinion for that financial fixed asset alone? That is what
see,
my.
yeah, I understood your point. There are two things. One is I tried to explain you logic behind that. Statute is telling not to do, so not to do.
Okay, sir. Okay, sir. Got it.
Clear? So I was trying to convince you why that provision was made. Okay. So certain you need to comply with that, right?
Oh, okay, sir. Fine. While
Yeah.
we're driving, we got to keep left only. We got to keep left. That's it.
Correct. Yeah. Good. So next, so multiple choice questions. Quickly, we'll read this. So during the audit of XYZ Limited, auditor requested management to provide access to company overseas subsidiary books. Okay, to verify significant intercompany transactions. The auditor was therefore unable to obtain sufficient and appropriate audit evidence regarding the transaction that were material to financial statements. Management also refused to allow the auditors to send direct confirmations to the foreign subsidiary auditors. Okay. So the auditor concludes the alternative procedures cannot provide sufficient audit evidence regarding these balances. Which of the following most appropriate auditors response as per says? You tell me. You want to give which option you want to choose? You want to give unmodified opinion? You want to give modified opinion?
Modified opinion
Key-oid
as a
matter?
limitation.
Or you want to give withdraw from the engagement?
It should be the modified opinion as the limitation is material but not pervasive.
Yes, correct. The option B is correct. Okay. Next.
Yeah, B is the right option, sir.
Yeah, perfect. So next, according to SA 701, key-oid matters are included in the auditor's report to enhance its communicative value. However, key-oid matters cannot be used as a substitute for so can it
I
be
think that's
used?
taking more time, so you can just get them revised.
Sure, ma'am. Yeah. So the auditor's description of significant audit procedures performed. Okay. So can be given. Auditors in CAM will explain the auditor's description for significant audit procedures performed. We'll give that
Yes,
in the
sir.
CAM, right? Can be used for disclosures made by management in the financial statements?
Yes, sir.
No, sir.
Can it be disclosures made by management in the
No,
financial
no.
statements?
Based on the significant judgment by that auditors.
Correct. So
Based on that.
disclosures, CAM cannot be used as a substitute for disclosures made by management in the financial statements. Okay. So that B is the right answer. We'll see the next one. Which of the following statements most accurately distinguishes a key audit matter from an emphasis of matter paragraph? This will take it up once we cover emphasis of matter paragraph. Okay. In the next class. This question, the auditor of ABC Limited concluded that the financial statements as a whole are materially misstated and pervasive. He has already concluded. Therefore, decided to express an adverse opinion on the financial statements under the same financial reporting framework. However, management requested the auditor include within the same report an unmodified opinion on company statement of cash flows. Can you give this?
No, sir.
You cannot give this. Okay. So, what is the right option? You see, can Auditor may include an unmodified opinion.
No.
Since it is separate component, no, he cannot give. Okay. The auditor should express an adverse opinion on the financial statement as a whole. Included unmodified opinion. Can he give? He cannot. The auditor should not include an unmodified opinion, a single statement within the report when an adverse report is given. Option C is the right answer. Okay. Next. During the audit of PQR Limited, right? So if there is a disclaimer of opinion while drafting the auditor's report, can a team member prepare the auditor's responsibilities exactly as SA 700? Okay. So which describes auditor responsibility to obtain reasonable assurance, assessment of risk, evaluation of internal controls, evaluation of accounting policies. Does the auditor has done all these steps? He has not done all these steps. Okay. So this point is when there is a disclaimer of opinion, the auditor responsibility also has to be reduced. Okay. This is the topic which we have missed. So in case of disclaimer of opinion, the auditor must amend the description of responsibilities to the fact that audit was conducted in accordance with essays and sufficient evidence was not obtained to form an opinion. He cannot give, I have discussed with those charged with governance, I have performed detailed audit procedures. All the details you give for SA 700, you should not give. Okay. So the answer is option B. So I'll anyways share this along with answers. You have answers and you have explanation for answers. Okay. Yeah. Any doubt you have?
No, sir. It's very clear, and you have given a lot of illustration. Very.
Yeah.
Sir, it's.
Thank you. Ma'am, over to you.
Yeah.
Yeah, sorry. Anyone?
I think
anyone
Geeta
else?
was telling something.
Answer.
Yeah, because your feedback is
Yes,
very
Geeta.
important, as I already mentioned in
Thank you.
last class also on Monday. Your feedback is very, very important. How we
Yes.
can make it more interactive, more interesting. And the purpose is to hand over the students to have conceptual clarity. What is happening in the practically real life scenario. So
Yes,
to
ma'am.
have that feel, we come out with new like initiatives. So if you have any feedback, please feel free to share. Your feedback is very, very important. And thank you, Geeta, for sharing the feedback on the previous session. Right?
Yes.
So
Yes.
I request all the students, please share your feedback. And I think today sir has given you a lot of homework. So you need to refer the chapter as well as you need to complete the homework also. Those questions which sir told you from the case scenario booklet, and in fact from the model test paper booklet also he covered questions, right? So you do practice, and please, if possible, at least 2 questions write every day and review that where what kind of mistakes we hear your feedback for the session, right? And now we are having our next session on next Wednesday. Okay, so because on Monday there is a holiday, so on 22nd October we will be covering remaining topics. Apart from the same, we will practice more questions from SA 700 series. Means 700, 701, 705, 706, 710 and 720. All 6 standards mixed question we will be covering. So I request you all to please gear up. I know it's Diwali, but of course you can work hard and you need to have grip of all those standards so that on Wednesday we can have fruitful discussion on the SA 700. So with this, wish you all a very happy and prosperous Diwali, and thank you to Venugopal sir. Thank you, my dear students. Thank you to IT team and BOS support team. Thank you, everyone. With this, wishing you a very happy Diwali once again. Thank you.
Thank you, ma'am. Thank you.
Thank you, ma'am.
Thank you.
Ma'am,
Thank
thank
you.
you, sir.
Thank you, everyone.
Happy
Thank you.
Diwali
Thank you,
to
sir.
you
Thank you,
too.
ma'am.
Happy Diwali, ma'am.
Happy
Happy
Diwali.
Diwali.
Happy Diwali, ma'am.
Happy Diwali, sir.
Happy Diwali, sir.
Thank you. Thank you. Thank you.
Thank you so much.
Yeah,
Thank
yeah,
you.
session.
Yeah, bye.
Thank
Good
you.
night.